Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Welcome to today's conversation. We have an absolutely fantastic guest with us today, Yoshi Yokokawa, who is the co-founder and CEO of Alpaca. Alpaca is a fintech that provides brokerage and crypto access services to developers and to other firms and has had absolutely amazing traction over the last few years. So I'm excited to talk about that. And also I'm excited to talk about Lehman Brothers for a little bit as well. So Yoshi, welcome to the conversation.
Thank you, Lex. Super excited to be here.
I was at Lehman in 2006, joined right after school in investment management in New York. And we had one fantastic year. And then we had one sort of like things are weird year where management told us all to buy Lehman stock as it was going down to zero, which we did. And then we had the year of sort of the British invasion as Barclays came in to take over the business. How was your experience?
Yeah, I guess like it's a little bit similar. I started full-time at Lehman, right after school, 2005. I was at more the capital market side, so I was in fixed income, literally in the securitization team. So doing the subprime, ABS stuff.
Thank you very
right?
much. Yes, thank you.
Literally, yes. And then, yeah, exactly, like 2005, 2006, like spreads are tightening, more demands, amazing stuff. And then became like 2007, same as you. Like it's getting a little bit weird, but at the same time, like leverage was getting higher. So like it's actually more interesting products like ABS CDOs, CDO squared, structured investment vehicle, like, a bunch of the, the securitization of the securitized assets. So that's what, started happening. And then basically after that, I think like US side, European side and the Asian side was getting taken over by the Japanese invasion, Nomura, instead of Barclays. So that's, I spent like probably 3 to 6 months, I don't remember, but like just going to office and reading books every day because I had to show up in the office.
Yeah, fun fact about the Barclays acquisition is that in order to afford Lehman Brothers and Neuberger Berman, which they thought they were getting but didn't, they sold off BGI, which was the iShares business, which is now like the so many trillions of dollars of BlackRock.
Wow, I didn't know that they had to sell that off for Lehman and Neuberger. Wow, I didn't know that.
I don't know if they had to, but I remember them being like, oh, we need some cash to buy this thing. And they got they got what they got.
Yeah, Neuberger transaction was pretty interesting, right? Because they ended up doing like M&A. Management buyout, MBO, right?
Oh my God, we can have a whole thing about Neuberger. Yeah. I was an analyst and I knew all the senior management there because, the investment management business was half brokerage and then half asset management and then a bit of private equity. So all of the people who were doing hedge fund and private equity stuff at a senior level ended up parking themselves on top of Neuberger, which at the time was like $120 billion mutual fund complex. And then all this stuff was sitting in the bankruptcy court, worth zero and maybe minus a lot based on what Bank of America paid for Merrill Lynch. And what these guys did is they said, hey, bankruptcy court, we have a better deal for you than selling this to Barclays, which wasn't going to pay up for it that much, I think. We're going to give you like all this money, except we don't have it right now. We'll give it to you in, I forget the number, but like 5 years. And also, we're going to borrow it from you. So they borrowed from themselves the money with which to do the management buyout. And the amount of quote unquote success that people saw from that deal was, incredible.
Yeah. I think Japan or Asia has been my extremely good friend because when I joined, I was kind of part of investment management as well, which before it became Neuberger because I was working for the pension fund team. And pension fund is basically investment management products, right? Like alternatives and all those things. So I remember working with that team pretty long time, but it was an interesting time.
Got it. Okay, so Nomura came in and took over. And so tell me a little bit more about sort of the part of capital markets that you saw, and then what did you see happen to the capital markets, and what were the core lessons that you took away?
Yeah, I think a few things that I really felt was that everyone was talking about, like if you remember the Lehman days, right? There's head of the research or head of the mortgage research. He's a famous guy called Srinivas. He was writing this like very pessimistic outlook on the mortgage market since, I don't know, like 2026, 2027, about like it's going to crash, blah, blah, blah. And I think at this point, like I think 2007, early 2008, we all kind of knew that this is a bubble, even though we're like fresh out of college and, have not experienced different cycles in the past. Even we kind of felt that something was coming. But the thing is, like, we kept on dancing, right? And at that time, like, I really didn't understand why we kept on dancing, even we knew that something was going to happen. I think like that was really the big lesson that I had from the experience, was that it doesn't matter if we knew it was coming, because like we don't know when it was going to come exactly. So like, we kind of had to keep dancing, because if we stop dancing, we're not going to be competitive anymore. So I feel like this kind of dilemma that we always face in the business, like kind of managing something that was probably going to happen, but we don't know when. So we kind of have to dance with it until it stops, and we try to react to it as quickly as possible. I think that was like big lesson that I'm still kind of always utilize when making a decision at Alpaca today as well.
I'm going to do my best not to ask a question about artificial intelligence, and NVIDIA stock and the Bitcoin price, because the water just goes one way. But the markets go on and the cycle goes on. Who were your clients at the time? Like, what were your counterparties and what kinds of things did they want?
So my basic clients was all the big financial institutions in Asia, from like, I don't know, like GIC, Temasek to Tokyo Mitsubishi to like, the Chinese banks and, all the big pension funds basically in Asia. They all wanted to have alternative assets, and alternative assets included securitized products like asset-backed securities, CMBS, and all those things, and even ABS CDO, higher yield products. So, we were basically trying to figure out how to provide that with the highest rating, which is AAA, as much as possible. So that was, what we've been working on most of the time.
Okay, so that's kind of the core financial experience and education you had. By 2010, you went independent to be a capital markets participant. What was it like to kind of clip off the mothership, and what pushed you in that direction, and sort of how did you think about the world?
I think after Lehman went down, I kind of felt like I've been always feeling that the industry was not for me for my life, if that makes sense. I think like when I entered the industry, I was feeling like this is going to be a training for me, that like when you do well, you get paid well, you get promoted well, you get evaluated well. But at the same time, like I wasn't really thinking what the actual work meant, or how that's going to resonate with how I think about my life or my view of what I'm thinking. So I think like, that's how I was like during working there. So when Lehman went down, I kind of went back to my original thought when I started in the industry, like, why am I here kind of thing. And that's the reason why like I kind of decided to leave the whole industry instead of working for different banks. But then like what I realized is after leaving the industry, I didn't have any skill sets or anything. I didn't know about startup. I didn't know about starting a company. I knew that I needed to survive because I needed to eat. And then only thing that I felt that maybe I could do is day trading, because like I was in the capital markets, I was supposed to know things. And so that's really the only reason why that I went, start doing day trading, here and there.
What happened next? Like, how did that go, and what did it lead you to?
What I realized was that without like very small capital, it's very difficult to gain enough money very constantly. So like, spending time in front of the monitors, studying the market, it was not really high, well-paid job. to continue to support myself. And another thing was that also I realized that I also analyzed what I really was liking during working at Lehman and what I was not really feeling too excited or satisfied when working at Lehman. And I think what I really liked about working at Lehman was working with extremely smart people, very sharp people. If you say one or two things, then my teammates understand 10 things, right, of what I was trying to do. And that communication and drive and speed was something that I truly missed or really liked. So I think I realized that I wanted to work with someone that I can trust with the same level of the integrity, speed, and then curiosity, and do something together. So that was that led me to building a few companies after doing the day trading with my friends.
And so some of those companies, finance was the customer again, right? For your machine learning company, what did that do and what was the product?
Yeah, actually the first company that we did, that it was nothing to do with financial markets. We were building the computer vision AI. I don't know if you remember, I think it was back in 2000, I think 12 or 13, there was Toronto University launched, because right now we're talking about AI, but at that time, deep learning was the word, right? There's deep neural nets, and then, this computer vision accuracy went up by, I don't remember, it's 10, 15% because of utilization of deep neural nets. So there's CNL and LSTM model and all those things. And then that's when this is going to be really revolutionary. Let's make something that we can utilize for this computer vision to be apply something. So we are selling that to, those medical agencies, or even Nintendo, those gaming companies who have a lot of visual contents, videos, images. We're actually providing that kind of a computer vision AI to those businesses. That was our first company that we did.
How did it go? What was it like to make a software product?
I kind of felt very disadvantageous at that point because I had no background in AI. I was not the engineering side. I was more doing the biz dev and marketing and sales. My friend, my co-founder, doing more of the tech and architecting and stuff. So I realized that I was not really fulfilling or utilizing my interest or skill sets in the right place. So we ended up to be selling that to one of the biggest Japanese technology companies called Kyocera Group. So that's how we kind of exited the business, even though we had a profitable and multiple clients using our AI, computer vision AI.
So that gets us to 2017 and the seeds for what is today Alpaca. And kind of paint 2017, it's fairly far, or not even midway, but fairly far into this Web2 fintech revolution. We've had the first wave of robo-advisors and then the neobanks around 2014, 2015 as a wave. Plaid is big. Stripe is starting to get quite large. On the embedded finance side, you might have things like, Drive Wealth, and some of the custodians are trying to open up some of the stuff underneath. How did you see the environment around you, and what direction did you go in at that time?
So when Hitoshi and I basically kind of spun out from another business that we started after computer vision, which was utilizing similar underlying deep neural nets into market price prediction. Basically, we spun ourselves off to actually create a product instead of doing more of the consultation or very heavy enterprise type of the business that we had at that point. And that was 2017. And when Hitoshi and I were just trying to go through how we build actual real product, I was personally extremely inspired and then kind of influenced definitely by the velocity that Robinhood had. I, of course, at that time, it was motif investing. I just said, there's a Wealthfront, Betterment, and Robinhood. And I think, Robinhood, because, back then, their wait list came out, I think it was, 2013 or 2015, somewhere around there. I was in Japan and I signed up for the wait list, but then I couldn't install it when they launched. So that was really something that I was very much kind of disappointed at the same time. I was extremely interested and started paying so much attention to what they do because I really liked what they do. I thought what they do is really cool. We wanted to build something that's like Robinhood in a way. So that was the initial thing that we were trying to do. If there's any demands that actually exists around that.
So B2C brokerage.
We weren't even thinking about brokerage. We're just like trying to figure out like what is the product that people want in that, like, trading and the investing in general. And we even didn't understand like if he needs to be a brokerage investment advisor or not, right? Like that's how naive we were. We even didn't understand the regulatory framework at that point.
What was the first version of the product?
The first version of the product, like, we created like, a bunch of the mock-ups of the, like, the same thing. Like, I think like, we still see those like, idea sharing by the, end customers, like, the copying stuff or, social stuff to the more of the neutral trading tips or like investing ideas and all those things to be flowing through into the app. Like, because like Robinhood was very skeleton in a way to really focusing on the utility of being able to buy and sell. So we thought that like, adding the content or actual knowledge or something else was a valuable things after Robinhood came. So that was kind of like, top-down thought process that we had, and we tried to create a bunch of the mock-ups and like did the user interviews. So those are the kind of trials that we did.
How far did you get with that?
And what we ended up realizing was that, and at the same time, like, we were learning that without actual trade execution capability, it would have been extremely difficult to even get to the people's attention or like, try out and create actual utility for the end customers. So we were finally studying how to get the broker-dealer license, how to set up like all those things, and like, working with the, underlying clearing custodian at that time as well. And then what we realized was that compared to the user feedback of the problem that end customers had, at least like, our discovery process, right? Of course, like people have a different discovery process, but for us, like, the problem, size of the problem or seriousness of the problem compared to that, what we hear from end customers, what we went through as Alpaca, Hitoshi and myself, trying to set up a broker dealer itself. Firstly, like, we went to like, for example, Interactive Brokers trying to get the API documents and trying to get approval. And, we didn't hear back at all. And then like, try to work with the, Apex clearing because like that is the only thing that really existed at that point. And then we heard about them because Robinhood was using them at that time. It wasn't that pleasant experience in terms of the fees and everything. So the problem that Hitoshi and I experienced was much deeper, much more emotional than like what I was getting the feedback from the end customers showing our mock-up. So at that point, like we realized that, like, why don't we just try to solve the problem that we went through or we've been going through? It may be, this is something that we can explain, like, feel very emotionally about the problem that we went through instead of trying to find the, problem that other people may have that, we could solve.
Roughly, how long did this take you? Is this like a couple of years or, this before you kind of launched your first version?
Probably 1 year process, I guess, because like in 2017, we started preparing for the broker-dealer license. And then it took like 1 year, 12 months to get the first broker-dealer license. I think it was like middle of 2018. So at that point, when we received the broker-dealer license, we knew that we're pivoting into more of like an API broker-dealer product. So I think like, that back and forth trying to figure out what to build, I think that process was probably like 6 to 9 months. And after that period of the time, we kind of made a decision. We just only focus on API, just that.
Just for context, like I built a robo-advisor between 2009 and 2016 that ended up being a wealth tech company. And we never integrated, and we had an RIA, but we never integrated down into the broker-dealer business. And we used traditional custodians, which was a special kind of pleasure. And I think the right answer in retrospect, after a decade, is that the folks who did go down to the regulatory level and, did control the funds are the ones who built large scalable businesses that are interesting. But like when I think about 2017, like you said, Apex definitely underneath a whole bunch of stuff. And then I think it was Point72 that had invested in Drive Wealth, right? As like a brokerage embedded finance solution. What was the competitive environment like? Was there any competition? Did it even matter? And then from that, who were your first customers?
So when we started this like API stock brokerage, we even didn't, like as a long-term view, we knew we wanted to solve the experience that we had ourselves going through with Apex. And then if we are to do that, of course, we would compete against like DriveWealth or someone like that. But our first initial version that we launched, we weren't even trying to scope that out that big. That was like kind of big pitch that we had, but like that's not something that we made the first product for. The first thing that we did was that because of that, API approach, we thought like, who are the someone that would use this right away instead of like, the big use case of like, let's build a fintech app. It was actually more of the problem or the interest to automate what the people do in the daily investing. For example, like, if someone using Robinhood, but like, some people are like trading so much, but like they're doing it full manually. And at that time there was like, hacking that was happening into the Robinhood code and trying to automate it trading, and they keep getting banned. And that was like always like viral in Reddit. And then we knew that was happening. So those are the kind of first use cases or the customer base that who started using Alpaca API, not to build the brokerage app, but to automate trade or like start doing the automated trading using our API.
Was permissioning difficult? Like data access, read-write access?
I think like, of course, latency base and then scalability, that type of the system requirement, of course, that's something that we have to extremely like build out the right product. But the capability wise is very same as what the Robinhood had built, right? So that itself was not that complicated.
How did product market fit come? Like which bits of this started to grow faster than others? And, how quickly did you know that it was working? You've been building this company for a while, and I know that growth can come in kind of stops and starts. Can you talk about sort of like where were the pockets of demand over time and how did it evolve?
So we launched this product in, I think, middle of 2018, and we went through YC end of 2018 to early 2019. So this was really just, we're saying that this is a API stock brokerage or, stock trading API. At that point, people were just really building automated trading. And then at the same, like, because of that, like, our traction, including volume and the user base has been growing extremely massively. I think growth level, like, typical YC company, we had extremely great hockey stick revenue growth and the user base growth. But at the same time, as you can imagine, super active trading is not like sustainable, like for a long time. And that I was feeling the very similar way because like, some people may make money in certain, market environment, and then they may lose money very quickly in some other market environment. So in order to continue to scale this at the significant level, I also knew that was not really possible back of our head. And then also like, we started this whole API first, also having this kind of ambition to solve the problem that we ourselves experienced actually building the, broker dealer. So we wanted to get into that too. That was like also back of our head as well. While thinking that thing, while seeing that like a lot of volume growing, we also started seeing this like so many inquiries and questions that came from the developer base, like who was using API, is that, oh, can I use my own version of Robinhood? Oh, can I use better version of Robinhood? Or can I build my version of the Robinhood in my country that's outside the US? So we started getting so many contacts and questions. That was really another timing that it clicked is that, okay, we have to now really build and, enhance the capabilities that really allow them to do what they really asking us to do. And that was not only, that really required us to build much more than just having the accessibility trading API to buy and sell only. So that was really when we had to add more investment into what we had. And so like after launching that, like, the market size completely changed as well.
So going from people who want to trade algorithmically to people who want to use that algorithmic trading infrastructure to create their own distribution.
That is correct. Like, which is building the fintech apps.
What were some of the early fintech apps that used you as the guts?
After deciding that, because like the first version of our API, it only had the API to buy and sell stocks, right? Because like, if you are automating your trades, basically that's why you need it. But in order to build the fintech apps, you have to have API to open the accounts, or send these some kind of reports. Those kind of things are needed, which is very different from just offering the buy and sell capabilities. That was really something that we had to build. But launching that product now, we are calling that as broker API, which is what we do as a more of the big revenue generator. The first two partners that decided to take a bet on this is a company called Midas in Turkey, and then also GoTrade in Indonesia. So those are the two companies, two fintech apps who decided to bet on our product that's newly launching.
How did you get into the other business lines, including the crypto one? What was your journey like there?
Yeah, so crypto was just simply adding the asset classes, right? So we had already kind of product lines of trading API, which is more targeted towards automated trading, algorithmic trading. And then there is another product called broker API, which is basically for fintech apps or banks to add investing capabilities. We already had that thing. So we just wanted to add different asset classes. At that point, we only had US stocks. So we wanted to add crypto. So for us, it was just a no-brainer that because everyone wanted to have a crypto accessibility regardless of how they access it. So that's how we went into crypto. And of course, Robinhood was there already. So we are, of course, always following what the Robinhood does. Because that's what our client broker dealers always get inspired by too, right? So looking at what the Robinhood does as a next step has been extremely important for us to add to, and the crypto was one of that at that time.
That's that's a really interesting product development approach, but it also makes sense, right? Because if I'm competing with Robinhood as a B2C platform, I need my infrastructure to be ready for me to go and sell that product. And so I see how that's a strong signal.
Yeah, and what's interesting is that we also have, I think more than half of them, our partners, broker dealers, are outside the United States. So they're targeting their own user base, but they're also trying to do so much research on how Robinhood became successful. So I think they are asking us the feature sets because they already studied what Robinhood did or what's working for Robinhood and asking us to build that. So that was also the kind of direction that we had to follow as a product development journey.
Was it difficult to get crypto assets into the broker-dealer context? I mean, it's lots of people are launching it, but the architecture is completely different, and you have kind of specialist players like Zero Hash and so on that focus on it. But what was it like to build out that part of the business?
So we had to bring my co-founder CTO Hitoshi as the head of the crypto to really extremely focus on it to launch it. You're right. I think it's one of the asset classes in a way. It's a crypto or US stocks or fixed income. But the reality is completely different architecture, different context, different players, and different risk appetites, and then different risk monitoring that we have to do. So it's basically same thing as building the new business from the scratch. That's how much of the resource and the mental capacity that we had to spend as a company to launch the crypto. But again, our job is to offer accessibility to our partners or our algorithmic traders in the best easiest way as possible, seamlessly combined with asset classes they already had access to, which was stocks and options and stuff. So that was really a big focus for us to make sure the experience is extremely seamless, that you are not connecting to new API, you're actually adding the new asset classes inside of the same API. So that was something that we really focused on.
I'm curious in terms of economic contribution to the business. You have these kind of three business lines and types of customers, right? You've got the people who are sophisticated traders themselves. Then you have the folks who are building consumer trading experiences and need infrastructure. And then a bunch of them are also now adding the crypto asset class. When I look at Robinhood or even SoFi or Revolut, there's a very large share of their profitability that's coming from crypto because the markets are less efficient or people kind of expect less tight pricing and so on. The market makers are able to make more money. When you look at your business, what are the main kind of revenue drivers? And then in which of them do you see growth accelerating?
I think our strength is, not offering only crypto only, but it's really combination of the multi-asset classes that we offer. So I think how I think about it is that I think profitability of the each asset class definitely do matter. So, those crypto and, options trading, those are definitely high profitability products. But at the same time, when I look at our partner broker dealers, or even algorithmic traders, sophisticated trader base, those broker dealer partners, they all have a different context of their own countries they operate in. So we've launched more than 300 partners in 45 different countries. So each of the country has a different context about, crypto, what kind of regulation, or even where that crypto needs to be custodied. It's very different from securities. So how I see it is that it's still ongoing process for our partners to be able to integrate crypto in a very seamless way in their own respective countries. So I think that's still ongoing, and we're very excited that it's going to continue to grow. But I think growth area that we see in terms of the revenue is definitely those high leverage product as well, the options trading. That's kind of extension of the US stocks that we offer as the majority of the asset class.
Yeah, I mean, just for scale, you've got 9 million brokerage accounts that I think you power. Just raised 150 million check with a unicorn valuation. So congratulations on absolutely amazing progress. When you think about the future, how big does this get? What is the end point, both in terms of product and then, is it 100 million accounts? Is it ex-US? What's the shape of the business at its terminal point?
Lex, I appreciate this question because I can talk about this for all day long. But so we brand ourselves as brokerage infrastructure company, right? Powering a bunch of the modern applications in the world. But the reality of what we do is extremely boring, always existed business for 100 years ago, which is just clearing and custody of this financial assets. That's what we do. So when we look at our business in that lens, our market size is basically really, really huge. That basically securities that's custodied in the world is about $350 trillion. And the people who will have access to the financial services and this investing is basically everyone on the planet as a human, which is 8.5 billion people. So kind of thinking about that, we are still, I don't know, even in the first inning or very half of the first inning, because we only have 9 million people that's connected. We have to get to 8.5 billion. So that's the kind of scale that I'm thinking that we have to get. And then in terms of the assets that's custodied in the world, it's 350 trillion. The biggest one is I think Pershing and Bank of New York Pershing and State Street's around 75 trillion or 50 trillion dollars. So we need to get to the size at least to become a major player in this field. And it doesn't take, it's not we're going to get there in a few years, but we're playing in an extremely long, big market. And that's why I feel I'm very excited because it's so aligned with my personal experience or how I think about the world and how it should be. And that's why I think it's super exciting that this is a big, long journey. But at the same time, it's a huge market that, we can do so much to make an impact.
There's been recent news of your collaboration with crypto players focused on tokenized equities, right? So Ondo, Solana, and so on. So I'm really interested in that, where that's going to go. And then the second question is, you mentioned BNY Mellon. How do you throw the stone through their window? On what dimension will you outcompete BNY Mellon?
Actually, these two questions kind of connected. Maybe that's the reason why you threw those two questions. But I think in terms of what's happening in the tokenization, I definitely I'd love to learn from you as well on this. But my view is that this tokenization is a very similar shift that happened, 50 years ago, where manual only financial services operations moved to, digitized financial services operations. And that created a whole new industry of brokerage or FIS or, those system developments and, technology companies. And then the whole industry became much structured, much more structured, less systemic risk, much more optimized. And I think what we are seeing right now is a very similar shift from like manual to digital, now digital to on-chain. So there's a whole industry that has to move on-chain. And why I'm saying this has to is that because like it just logically makes sense and it's good for everyone. It's less systemic risk because like settlement risk becomes almost zero because of that, settlement atomically. And then like, all those assets will be on the same layer or same wallet. So it can be cross-marginable everywhere in the world. So that creates much more efficiency in terms of the capital usage. So it's again, less, credit risk, less systemic risk. So as a financial services as a whole, not only talking about the capital markets assets, I think which is like tokenization is a one way to get there. And the stable coin, I consider them as a tokenized USD, is a part of that too. So I think like, that's how I view about what's happening. And we still don't know yet what is a majority, like, major primary kind of ways that's going to happen in like, when we look back 20 years later. But like, our job is to, be the infrastructure to support any activities that will happen because there's a shift and the migration from digital financial services operation to on-chain financial services operation, and someone has to bridge that. And the people who's going to bridge that will have the major influence and the market share when that moves to the full on-chain financial services operation. And that's connect to your second question about how to throw a stone at the Bank of New York melon is exactly that. When the like whole industry shifts to the different regime, that's when the like real new winner arrives and there's a replacement of the major players. And that's how I see what's happening, in my opinion. And that's Alpaca has a very real shot to become like major player when that shift happens. And we don't know when, but it will happen for sure. And that's also why I'm saying that this is a very long, big game that we're playing. But we're extremely optimistic that we can actually get there to win the majority, major share in this whole, securities custodian clearing layer of the $350 trillion that's existing right now.
I'm ready to invest in your seed round. If you can just open up that safe note for me, that'd be great.
Yeah.
So I'm going to be a little bit indulgent and just share some personal experience as well. I spent 4 years at Consensus, which is the Ethereum Labs company behind MetaMask and all of that. This obviously is like a niche podcast. It's for people who love fintech and decentralized finance and so on. But there's still going to be people who are operators or strategists who are like, I am so bored of listening to these blockchain people talk about tokens. Like it just doesn't matter. Like there's still people out there who are like this or who think, Trump launched a meme coin and therefore everything is crime and corruption, right? And I have two examples. The first one took me to the path where we are today personally. And then the second one is in the last like 2 years. And I think it just, beyond a shadow of a doubt, it is obvious that finance is moving on chain, and that's the right answer. And so the first example is when building out the robo-advisor, or at the time it was like private label robo-advisors, like 2012, 2013. And the custodians around are BNY Mellon, Schwab, TD Ameritrade, and some other smaller people who are now out of business. Apex, but that's kind of API first. And nobody wants to do private label or API stuff, except at the time it was TD Ameritrade. And it's been so long ago that I think I can dox them. And TD Ameritrade says, okay, like come build your private label robo-advisor for like the 500 billion of assets on our platform that are under RAAs. And, they'll be your clients, we'll be your platform, just integrate into us. One of the things we do, again, it's 2012, 2013, is just digital onboarding, which means like as a human being, you go to a website or a mobile app and you put the things into the text box, and then that thing from the text box, like you want to open your account under your name, right? And so you want to just put the information in and then have the account open, which today is, pretty trivial. Here's what happened at the time. So we built a user interface on the web. So people put things into a text box. Then we take that data. We can't just send it to TD Ameritrade because at the time it didn't have like an API, or like you can't like put the thing into a database with account opening and all the households. We took that data and we sent it to a PDF converter that manually took that data and like stamped it onto a scanned TD Ameritrade account opening document, which is like 55 pages, right? So I have a person who's spending, their job is to like map the fields in the account opening document for the broker dealer, right? To like this web form that we're doing. And of course, every quarter, the custodian changes their paper form, right? So you constantly have to redo your software of how you take your useful text data and then stamp it onto a paper document. And then you take that PDF that you've stamped the data on, and then you put it into another plugin, which is, I love it so much. It's an internet fax machine. So you have to fax the PDF.
I love it. Fax.
Yeah. You fax the PDF to like a back office in New Jersey where it like prints out. And then there's a person sitting there. You can paint the picture for yourself. There's a person who picks up that printed out fax with the thing from the internet and so on, and then takes it and goes over to their computer. Their computer is running some back office system, which is, I assume, in a nuclear bunker somewhere, with a green screen, and has to type in the information from the printed out fax into their backend database. Okay. And that is digital onboarding. However, you obviously have typos, which are called breaks. So the person in the back office at TD is like typoing your name wrong. And so like the money you send to them, you wire them some money and then it like doesn't land in your account because the name doesn't match the thing. So then both TD Ameritrade and the middleware software provider, which was us, needs to have a human being employed to check these breaks every morning to see if the money has landed or not. Okay. And that is digital account onboarding in 2012. And that is also why it was the correct thing to build your own broker dealer. So that's story number one. Story number two, people should remember this, is Synapse. So Synapse is a failure of 2 years ago. This is also why I think like fintech is not dead is the wrong word, but it's sort of like has reached its Web 2 fintech has reached its potential and Web 3 is necessary to move forward, right? So Synapse, or like this whole like embedded finance theme, was like a response to Mint.com and data aggregation and these Plaid and these companies that say what we're going to do is we're going to crowbar the data out of core banking systems or brokerage systems and then scotch tape it together into, like databases that scale. You've got small community-sized banks that are willing to take risk and like pop open their infrastructure to middleware platforms like Synapse. Synapse then resells that data access to folks like Mercury and a whole bunch of other neobanks. And everybody's like pretending that this is open banking and like embedded finance works. I had the founder of Synapse on the show to talk about this, and he's hugely maligned, and probably for good reason, but he's certainly not the person responsible for what happened. And what happened is that like 50 million disappeared from their systems and from the bank systems, and like everybody lost the money and none of the ledgers connected. We later learned that it's like the way Synapse got the information to sync the ledgers was a CSV upload that somebody from the bank would get from Jack Henry's core banking system and then upload that into like an FTP, like drop the CSV file here in the Synapse interface. And some back office person at this bank who's getting paid, 20 grand a year, just like didn't drop some of the CSVs because they were like, oh, they don't need that. And it's just like, and you still have these people who are like, I don't know what blockchains are for, and it's, I don't know. It's pretty clear to me.
Yeah, and I think like that's the reason why we knew that we have to be a custodian ourselves, and that's why like we invested in a lot into like basically this DTCC membership and like building our own ledger, so we don't use those exactly that like brokerage or like those outsourced vendor system. Like that's what all the existing like incumbent guys do, right? Like even though they have DTCs in their custodian by themselves, but they're actually using someone else's vendor system, ledger system. So how would you be actually in control of what you're doing? That is an extremely scary part. And that's the reason why like we knew that we had to completely internalize, the license stack and membership stack, and then also the tech stack as well. And that's what we did. And I think like, the banking away from the broker dealer side ourselves, banking is kind of catching up, right? Because like Synapse was on the Evolve, and now like there's a lead bank and Column Bank, and now this Erebor Bank that's doing from the extremely ground up, building the membership and tech internally, everything, at least Web 2 way, or maybe for the Web 3. I think like that is finally, I think what's happening, this fintech wave coming to the real financial services, because like, this custodian clearing settlement ledger, this is real financial services that we have to like update. And then like updating that will connect to much easier path from that updated digital to the on-chain. That migration is much easier as long as the industry and the regulation allows us to do that.
Absolutely. Yoshi, it's been wonderful having you on the podcast. If our audience wants to learn more about you or about Alpaca, where should they go?
Well, I'm open on the Twitter as well, and then we're at the alpaca.markets. You can pin us there as well. But like in Twitter, Alpaca HQ. My Twitter is IYOSHYOSHI. It's been amazing conversation, and it's amazing to kind of have a conversation with the fellow Lehman alumni here.
I still have a cup with the logo to prove it.
Yeah, that's amazing. I have a t-shirt.
Awesome. Thank you so much for joining me today.
Thank you, Lex.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.